TA with MK. It's TA with MK. Welcome back to another episode of TA with MK. Today we're gonna zoom way out. Yeah, something like that. And maybe, maybe even over here we can change the sun in this case to a Bitcoin. Bada bing, bada boom. And maybe we can make Saturn over here like Ethereum. Perfect, perfect. And then let's make, what is it, Jupiter? Yeah, that's Jupiter. Let's make Jupiter Litecoin. Oh, dang, that looks sweet. Might as well finish this off. Let's get an XRP and a Cardano, DOT, Solana, Luna. Let's throw in a Chainlink. What's Earth gonna be? Well, of course, Dogecoin and a little tiny Shiba Moon. Ha! Hey, if your favorite coin didn't make it to my solar system, I don't want to hear about it. It's hard to beat out Dogecoin, and especially Shiba. No, but seriously, I do actually want to hear about it. Leave me a comment in the comment section and let me know what would be your crypto solar system. I'm guessing Atom probably should be in there. Cosmos, right? Maybe like Algo. Don't forget about Harmony. Hardy har har har. In today's video, we are going to zoom out and discuss Bitcoin on the monthly chart. If you're enjoying the content, please remember to like and subscribe. Let's go. Now, just to be upfront, like I always am in my videos, to me, trading is not predicting. It's more having a plan and being prepared to execute said plan if price action goes one of two ways, because it's going to go one of two ways. Well, I guess it can go straight sideways and do nothing like it's been doing. But eventually it's going to go up or it's going to go down, right? So we want to have a plan. So I'm looking at the Bitcoin monthly chart here on Bitstamp. Bitstamp has the most data of any of the TradingView charts I can find. It goes back to November of 2011. Another thing you always want to be very upfront with yourself about when it comes to Bitcoin and zooming way out like we're doing on the monthly chart is realize that this asset is only like 12, 13 years old, so there's not a lot of data points to go off of. I mean, you have some YouTubers that say, hey, it did this in 2013, so it should do it again, or it did this in 2013 and 2017, therefore it should do it again. Well, that's only 2 data points, and so it's kind of hard to say that that's a trend per se, when it's only happened once, twice, maybe even 3 times. If you have an asset that's been around for, say, 100 years, and it's done something, every 6 years throughout that history, or every 6 to 8 years, you have a little more to go off, if that makes sense. That being said, there is still some history, and Bitcoin has done a couple of things, in rhyme with each other. And so just to have a plan, for both ways, we're going to discuss a few of the things that I've run into when looking at the monthly chart. The first thing I want to show is that when Bitcoin topped out at the end of the 2013 bull run, right, it hit the price level of $1,095, almost 11, well, actually it got a little over $1,100, and then it proceeded to, retrace slowly after that. Had some bounces along the way, obviously, had this pullback, a little bounce, pullback. But one of the things I want to focus on in today's video is this 21, and a lot of people use the 20 or 21. They're very close. I like to use the 21 moving average, but you'll hear a lot of other traders use the 20. If you're using the 20, it should still look very, very similar to this. But this white line, which I've now drawn a yellow line over, this is the 21 simple moving average, right? But you know what? To make things even simpler, I've actually added now the 21 simple moving average and the 21 exponential moving average. I will put a link in the description to a video I made a few days ago that covers moving averages, which ones are the most commonly used in trading. And I also go over in that video the difference between a simple moving average and an exponential moving average. But the main difference is exponential puts more emphasis or heavier weight on recent price action. So it'll curl up or down faster based on, pumps or dumps than the simple moving average will do. So then what are my spidey senses telling me? Well, I'm just looking at the end of the 2013 bull run, and I see, we had this big green candle here, right? The blow off top. Bitcoin blew up the top. And then it had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 straight months of a downtrend, right? Only had 3 green candles mixed in there with 7 red. More or less was in a triangle consolidation pattern. A descending triangle, and then it lost these 2 moving averages. And I actually, having turned them both on now for the first time, ironically they were crossing each other at the same time. But at any rate, Bitcoin lost the 21 moving average, retested it, bearish retest as resistance, and then proceeded to drop another 60%, right? Down to its bottom at about 150, 60 bucks. Go to 2017, below off top, not quite as beastie of a green candle, but you had about 3 months straight of just upward price action. Blows off the top. Then you had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candles. Again, ironically. Same pattern even, ironically. Descending triangle. It loses just as the two cross the 21 moving averages, and then proceeds to plummet another 50, almost 2%. And so the next thing that I took note of was that in both cases when it lost the 21 moving average, or averages, since we have the exponential and simple, it happened in October of those years, ironically. So we had 2014 October, it loses the 21s, and then that's when it has the 60% pullback. Same time in 2018, it lost it. So we could use Alt-V to mark off this coming October and say, okay, let's look for some other things that possibly mirrored between at least the first and second bull run. Well, from the time that it hit the top, it actually, 1, 2, 3, 4, 5 months later, the first bull run, did actually test the 21. This is the exponential, but it tested it as support, right? And then it, held it up for another 5 months after that before it actually lost it. Okay, what about the next bull run? 1, 2. Now this was actually a crazy wick down, but it didn't quite touch it. So 1, 2, 3, 4, 5. About 6 months into that downtrend, it started testing, but it didn't lose it for 4 more months in that case before its 50% pullback. So we do not know if we're at the top or if this will have any sort of rhyme or mirror to the previous 2 bull runs. It already looks different because in this year, in this bull run, we have what's essentially a double top where price action basically was rejected at the same area within a few $1,000s. You didn't have that in the previous bull runs, obviously. You just had one single blow off top, one single blow off top, right? But if we were to assume that this most recent top is going to be this bull run's top, at least for now, then, 1, 2, 3, 4, 5 months in-ish, about the same as these previous 2, we're testing the 21. Does that mean that we're going to lose it now? Does that mean we're ever going to lose it? We don't know. We don't try to predict, but let's just say it follows a similar, a similar time frame to the previous 2 bull runs. What we could potentially expect is something maybe in between both. In this one, it actually bounced. Let's go look at our price or use our price range tool. This one, when it first tested, it actually pumped almost 100%, 80%. Before it actually, retraced and ultimately lost the 21. In the next bull run, it had some candles that were good. Let's see. So it tested the 21 here and pumped 35%. So let's just assume that something similar could happen, especially because in yesterday's episode, I mentioned that the weekly was starting to turn kind of bullish. Well, what if we get a scenario where maybe we pump, 30 or 40, even 50% from our test of the 21 at around 38K, right? Well, what would that look like ultimately? Well, that could put us going back up to around between $50 and let's say $53,000, something like that. And that would actually make sense with a lot of other, indicators that we'll go over in, future videos as far as the Fibonacci's, what you can kind of expect as far as a retrace pump from all-time high, a dead cat bounce, what a dead cat bounce is usually, bounce to. And so there's some confluence with why that would make sense. So I guess what I'm saying is we don't really know 100% what's going to happen and some of the stuff going on in the world and the Fed stuff. All that will play a role in it. But just TA, purely TA, there's some signs or there's some data that would suggest that, yeah, maybe we do see some sort of a bigger relief bounce before ultimately just forming a similar, triangle pattern to every other bull run's blow off top, although this one didn't blow off, before we ultimately lose the 21 moving averages. And it can maybe even happen around the similar time in October. And then, maybe we could expect then from whatever point, the 21's at to pull back between, 40 or 50%. Something like 20 to 28K. Now, to finish up today's video, I want to also show super quick just a couple of the monthly indicators and how they looked at, during different time periods of the previous bull runs. So I'm going to double click and bring up my MACD. Now, with these same Alt V lines that I have here on the chart, we could see that the MACD, when it lost the 21s, was 3 months into red candles in the 2013 blow-off top retrace, right? 2017, same thing. It was the fourth candle at any rate, so similar to the 2013. So there is still potential, if we're going to go off, if it does something similar or rhymes to the past, that we could actually, not see the pump to 50 to 53K, as I suggested. And maybe because right now we're 3 big ugly red candles in, we might just, and we're testing the 21s already, that we could lose those sooner than later. Maybe we don't see much of a relief bounce and we just, plummet our 40 to 50% now, which could put us, pretty low numbers. 19K, for example, is possible. The RSI is another one. From the time that both of those blow-off tops happened, or sorry, not blow-off tops, but when it lost the 21s, the RSI was at very similar levels to where it is now. I mean, you can see, as indicated here, if I do it Alt H for a horizontal line, lost it there, lost it there, and we're not far from there. So if we don't bounce soon, there's a chance that if we come down and test this level on the RSI at around, 48 to 49, and we lose that, then you could easily see us, plummet down until we find support, down around here. Stochastic is another one. You can see that when it got down out of this purple zone, that it spent, a long time down here before it ever actually recovered. In both cases, 2013 and 2017. We haven't been down here that long yet. If we use this tool right here, the date range, we can say, okay, from the time that it lost it, the first time it spent 577 days. The second time it spent, from the time it lost it, before it came out of it, 485 days. This time, we tested it there, but we didn't really lose it till just recently. We could be looking at, let's just say we take like an average and say like 500, something like that. We might be looking at next year in May before this ever actually has some positive momentum on the stochastic. Dang, did I bum you out on that one? Hey, I'm not predicting anything. This was just a video kind of showing what the monthly looks like from a bearish perspective. Tomorrow in my video, I will go over some of the more bullish things. It's not always a one-way story with Bitcoin or with crypto or stocks in general. There's always two sides to the coin. We don't always know which way it's going to flip. But today I focused a little more on what the bearish signs were on the monthly. Tomorrow we'll go more into the bullish signs on the bigger time frames. Hope you're liking the content. If you are, please remember to like and subscribe. This was TA with MK. My name is McKay, and we'll catch you tomorrow. It's TA